So we're going through a few different trade examples here, and we're going to take a look at this field in Edgewonk. Which level did the price reach first? And you have two options, either select the take profit or the stop loss. Sometimes this can be confusing for newer Edgewonk users, but it's actually quite simple. And you really want to make sure that you have this data filled in and it's also filled in accurately, because this data will then unlock the trade management area in your chart lab in Edgewonk. And this will then help you analyze your trade management behavior. This feature analyzes whether you are exiting trades early, whether you're leaving money on the table, whether a trailing stop loss approach is the right strategy for you, or if you should just trust your initial plan and let the trade play out. So assuming we go long at this current price, the stop loss is placed here and the target is set here at the upper level. We have to follow the price and we only have to ask ourselves one simple question. Does the price reach the initial target or the initial stop loss first? And the word initial is here very important for Edgewonk. So let's just play this out and see what happened. So assuming we did not interfere with the trade, we can see the price moved a little bit up, moved against us, didn't reach the initial stop loss, and eventually would have reached the initial target. So in this case, it's very straightforward. You tick here the take profit because the price hit the initial take profit before it hit the initial stop loss. And in this example, the price would not even have hit the stop loss. So very straightforward example. But let's take a look at a trailing stop loss approach. So the initial premise is the same. The entry is here, the initial stop loss is here, and the initial target is here. So we see the price moves a little bit in our favor. And assuming that we are now trailing our stop loss, we are moving the stop loss to this price level. The initial stop loss is still here, of course. The initial target is here, and the new trail stop loss is here. And the trader would have been taken out. Later, the price would have reached the initial target. So what do we do now in Edgewonk? As I said, it's very important that we always only analyze the initial target and the initial stop loss. So here the price would not have reached the initial stop loss, and therefore we still would tick this field with the take profit. The price did not reach the initial stop loss. It's really important that you understand this because this is a very common case and it's important that you have accurate data in your Edgewonk. Let's take a look at another case. Again, the trade is the same. Initial target is here, initial stop loss is here, and the entry is here. We don't interfere with the trade. We did not trail our stop loss in this case. Everything is unchanged for now. But now the trader is exiting the trade at this price point. A lot of traders are struggling with holding onto their winners until the initial target has been hit. So the trader is exiting the trade here for a profit. But the trader doesn't allow the trade to run until the initial target. A few candles later, the price would have hit the initial target. So what do we do? Again, just ask yourself the question, did the price reach the initial target before the initial stop loss? And which level was hit first? And this is independent from your actual exit. Only the initial stop and the initial target matter here. So in this case, the price would have reached the initial target and we would still tick this with take profit here. So let's take a look at another example. The entry is the same, the take profit is unchanged, but in this case, the trader has decided to use a smaller stop loss. And here, the price would have taken out the initial stop loss for the trader. It doesn't matter if the price then later reaches the take profit, the initial stop loss would have been hit. So in this case, you tick stop loss here under this field. Again, only the initial stop and the initial target matter here for this one. Now let's take at another example. The initial stop loss is here, but in this case, the initial target is much higher here. And we're waiting for the price to play out. We're only interested in the initial target and the initial stop loss. And even if you exit the trade at this point or any other point here, you are still going to monitor the initial target and the initial stop loss and how the price is relating to both. It's really important that even if you exit early, you still analyze the initial target and the initial stop loss. Now you can see if we extend this forward, the initial stop loss would have been hit. Of course, in the meantime, the price would have gone up, come close to your initial target, but the initial target at no point would have been hit and the initial stop loss would have been hit. So in this case, your tick initial stop loss would have been hit. And no matter where you exit here during this duration, whether it's for a profit, whether it's for a break-even trade, or maybe even you reduce your loss and exit somewhere here, you still tick initial stop loss in Edgewonk in your trading journal. So to recap, it's very straightforward. You look at your initial stop loss and your initial take profit. Those are also the values that you need to enter in Edgewonk. And then you just follow the price, no matter where you exit, no matter if a trailing stop loss takes you out, you always refer back to the initial stop loss and the initial target, and then you answer this take profit or stop loss question.